Bitcoin getting crushed again. It is now off 16% since hitting all-time highs earlier this month.
But the bank also pointed to tens of billions of pounds in extra savings by households who have not been able to spend, but at some point could be unleashed. Another much-needed shot in the arm.
Assalamu alaikum, and welcome to another episode of Focus on Finance. In today's episode, we look at accounting. We'll define what accounting is and have a look at the origins in history and its development to date. Joining me in the studio, I have Mr. Shahid Ulash. Assalamu alaikum.
Wa alaikum salam, Shafique Sahib. It's a pleasure to be on this program.
It's a pleasure to have you. Shahid is an accountant by profession. He's the managing director of a management company based in Mauritius and also the chairman of Mauritius Finance. So earlier, we asked members of the public what they understood accounting to be. Let's have a listen to what they had to say.
They balance accounts for what comes in and out of a business, or the expenses that they make and what they buy and what profits they get as well. They try to balance their accounts, yeah.
C'est-à-dire de récolte, tu as une transaction en termes de coût l'argent peut aller, coût l'argent dépensé, que je n'ai investi, tout ça là, c'est un récolte.
Mais je garde un récolte, comment dire, mon invoice, mon transaction qui passait, je pense que je fais là.
La comptabilité, c'est la tenue des comptes d'une société en général, c'est-à-dire qu'il y a une espèce d'équipe qui est là pour voir si tout va bien au niveau des comptes, finances et tout.
C'est une calculatrice qui calcule.
Comptabilité, uniquement une filière, c'est le accounting, tu plans tes bonnes affaires, tu calcules les dépenses, voilà.
Bonnes affaires, vraiment, surveiller tes choses là-dedans, tu gagnes un chiffre, tu as besoin de dire leur chiffre, tout ça, c'est ça la comptabilité, je pense.
Et si nous causons comptabilité en termes un business, bien sûr, nous causons des dépenses pour business même. Et comptabilité, dans plusieurs domaines, il y a différentes définitions.
Mais la comptabilité, ça veut dire moi, on fait un compte pour mon business à la fin de l'année, faire un compte rendu de toute mon entrée, mon sortie.
Keeping documents of accounts and financial statements and handling money, these type of things for companies and businesses and just people in general.
Calcul, ce qui vise à dépenser, tout ça là.
L'idée que tu es capable d'improve business sur finance, que tu es capable de faire des costs pour faire business more profitable.
Un compagnie, il connaît combien les budgets les besoin dépenser ou bien combien je pense. Plus ou moins, c'est ça.
C'est ce qui me connaît, c'est une external person qui vient checker un compte. Souvent de fois, ce qui m'entend parler, c'est un accountant, c'est pour une compagnie. Et il fait un compte et audite un external auditor, il vient, il check sa compte là pour vérifier ce qu'il est bon ou pas.
Je te récolte toute une transaction qui est dans une compagnie.
So, some interesting views of what accounting is. Perhaps you'd like to clarify and confirm what actually is accounting.
Accounting is basically the science of record keeping and ensuring that the records are accurate. So there are two aspects to it. There's a bookkeeping aspect, which we need to ensure that all transactions are in the books. And then secondly, where those transactions have been put in the books, whether they are accurately recorded. And obviously, then you have to verify the accuracy and so on, which spills over into audit. But in terms of accounting, that's the responsibility of the accountant. So the profession itself is about ensuring that you have accurate records, obviously for users of the accounts, then thereafter to make decisions based on historic information.
Okay, so just to check my understanding, accounting is the record keeping of financial transactions.
Absolutely, it's a record keeping of financial transactions, historic financial transactions.
Right, and who would keep accounts as such then? Who would use accounting?
Basically, there are a wide gamut of people who use accounts. Let's start with the owners of the company who want to look at the status of their companies, the status of their finance. You have the authorities who basically look at the accounts, ensure that the accounts are in line with the whatever regulations that regulate the business. They are the tax authorities who look at your accounts and assess the tax amount that you have to pay. They are the bankers who look at your accounts to ensure that you are financially viable. So there's a wide variety of people who actually look at the accounts.
So any company or group or society of individuals that have financial transactions can use accounting for historical records.
Absolutely, and I think if you look at accounting, that starts from way back into Mesopotamia and so on, and that has come together with building of trade, that has come with the advent of writing, counting, and use of money. Accounting has come together with that way back, and it has evolved over the years. So, and the very purpose of that is to ensure that you have a basis on which you can transact. So accounting basically gives you that basis where you can actually record transactions, know where you are at a certain point, and then take whatever transaction or business forward.
Perfect. So you touched on Mesopotamia. I mean, maybe our viewers may not be aware what that refers to. How far back are we talking about?
We're talking about quite a bit, 4,000 or 5,000 years before Christ. So it's a long way back. And even you can trace it back to more recently around the times of the Arabs, where the Prophet Muhammad ﷺ came forward, and you knew that there was record keeping, there was the collection of the zakat, of the jizya, basically to ensure that you had proper records, and then basically ensuring that from the coffers there was support that was given to families and so on. So that accounting per se already existed long back in a less structured way, but definitely was there.
Yeah, and if I'm not mistaken, I think some of the earliest forms of recorded writing refer to accounts of transactions.
Absolutely, as I mentioned, it goes way back. And if you look at the very premise of writing, scribes basically that were there even in ancient Egypt, you would see that they would be recording historical events, but they will also be recording transactions. So it has been present since times immemorial, since basically civilization started, and this has, as I mentioned, evolved over the last few decades and centuries.
And currently, accounting, there is a profession around that. So accountants presumably they work in accountancy.
Absolutely. I think accountants, basically, they predominantly belong to what we call the accountancy profession. And there are many regulatory bodies globally that regulate accountants. You need a professional qualification to put yourself forward as a professional accountant. The most common ones would be, the ACCA, the Institute of Chartered Accountants of England and Wales. You have the Chartered Accountants of South Africa, India. You have the CPA program in the US. So yeah, it's a global program that you have.
And we seem in Mauritius to have a lot of accountants, so it's a popular profession.
Absolutely, and I think that has to do with the fact that was one of the most affordable international qualifications that was available at some point in time. And the development of our financial services industry has basically created a lot of opportunities for accountants. And obviously, a lot of parents have pushed their kids into accounting. And that's why historically we have so many accountants. And if you look at a per capita concentration, we're probably one of the countries where we have the highest concentration of accountants per capita in the world.
Yeah. Interesting. We've noticed this. I think visitors to Mauritius and the Jamaat, have commented on the number of accountants. Let's take a step back. So we talked of the origins of accountancy in terms of history and even at the terms Islamic times. But the current accountancy profession, where does that date from? If you could take us through.
I think if you talk about the proper bookkeeping, that double entry, that starts in around 1446 or 1447, and that was in Italy by a person named Luca Pacioli. So this is where it actually started, where the concept of double entry started. And then obviously it evolved over time, where you had in the late 1800s, where basically the accountants started grouping into associations, and then late 1800s, where the Institute of Chartered Accountants of England and Wales was set up. And this is what actually started it was mostly a self-regulatory body, but this is where the profession started in a more structured way.
And you mentioned double entry. In our next program, we'll go into a bit more of the details of what accountancy is and the structures, etc. But what makes the difference between before the standards were set by these bodies and just people making, records? I remember as a child in the Chinese shops, they would be recording every transaction on a piece of paper. I presume that is a form of accounts, but it doesn't, and they weren't using accountants. So what is the difference between someone making their records informally and the accountant and the need for an accountant?
I think when we look at it, record keeping has always been the case for any business, because every business needs to understand what's available in terms of cash, what they've sold, how do they need to replenish their stock. And I think that's a basic principle of any business. What's also extremely important is that how do they project their business in the future? And only the historical records can allow them to do that. So if you talk about the informal accounting, that has started way long time back. Now when you talk about more formal accounting, why there was a need for formal accounting is because you need to have consistency in record keeping. And I think with the international standards coming into place, so every country had its own standard of accounting, then slowly moving into international standards, it's to bring consistency in record keeping, consistency in accounting. And that allows comparability of accounting data, accounting standards, and it basically ensures a sounder financial system. When you have a proper base to basically compare accounting, you understand what industries are performing well, what companies are performing well, and they've used a consistent basis on which they assess their performance. And this is where that allows basically, for example, financial analysts to take calls on certain companies, banks to finance certain companies, certain people to invest into certain companies. The basic data is accounting data that's used.
Interesting. So there are standards so different sets of accounts can be compared against each other. This is one of the functions of the bodies. They standardize. The Jamaat itself has a system of finance, which we will cover in separate programs. And it also produces accounts, which it gives to the authorities. So you can have different sets of accounts for different purposes?
Absolutely. When you're looking at accounting, basically, for different types of businesses, you'll have different types of accounts. Typically for sole traders, they would predominantly prepare their accounts on a cash basis. So what they do, whatever they've sold, they will get in their books, and then they will have their stock at which they'll replenish and so on. So cash basis is basically the easiest way of doing their accounts, because they don't have that many liabilities except whatever they have to pay in terms of the goods that are consigned at their end. For more complex businesses that are taking credit facilities and so on, it's important to record the liabilities that occur from those consignments, the liabilities, the creditors that they have, the debtors they have, because that's basically gives the full picture of their business. So if you look at predominantly what you have in terms of accounting, you have either a cash basis or historical cost basis. And basically then you just need to ensure that you're maintaining your books and following standards. And if you look at the main standards now, it forces most people to book, most businesses to book their transactions on a historical cost basis.
Okay, so I think you may have lost some of the people there with the details. Let's go back to what you said is the simplest one, the cash basis.
Yeah.
So perhaps explain to us at high level, what does that mean? So a simple, the simplest type of accounts in the modern system, cash basis, what does that mean?
Simply put, you start off a business with 100 of capital, right? Let's say you buy 80.
Explain what capital is.
Okay, you have money, right? Yes. You have money. You have 100 rupees of money. Yeah. That's in your pocket. You want to start a business. So let's say I'm going to use that 100 rupees to start a business. Yes. So I go out. I say I'm going to buy 100 rupees of let's say foodstuff that I'm going to sell to people at a profit. So I buy in bulk at 100 rupees, and then I will sell it, let's say at 120 rupees total. So once I've bought the 100 rupees, I have 100 rupees of stock, right? That's worth at cost, right? But that stock, basically, I need to sell it to realize my money. So once I've sold the entire thing at 120, so whatever 100 I basically as capital is now 100 as capital plus 20 as profits. So basically, you once you've sold, you will realize the cash. This is what basically historical cash accounting is about. So basically, you don't recognize anything except once you've sold. So let's say you've sold only 60 rupees of articles. So you'd have basically 100 rupees of stock. Let's say you've sold half of it, which is you have a 50 rupees of stock. You would have 60 rupees of cash, out of which 10 is profit, 50 is the capital that you invested initially. So this is in broad terms how it works in terms of historical accounting. Cash accounting.
Cash accounting. Well, let's stick with it with a simple example. Yeah. So you have 100, you buy 100 of goods, and you're selling them, and you will not sell all at once.
Yeah.
So the day-to-day recording of what has been sold, presumably they're using a cash register.
Exactly.
And their invoices.
Yeah.
So they'll be recording what they're buying and recording what they're selling.
Yeah.
Now, at a high level, is my understanding correct that at some stage, an accountant will come and take the individual, what we call transactions, so each sale and each purchase, and then put them, summarize them, make a report, which is called an account?
Generally speaking, for those type of businesses, no, they don't have accountants per se, right? They will maintain their own records in the following way. So they will have their own cash book.
Yeah.
So they will record whatever they've sold, and then they will book in every single entry, and then they will obviously reconcile their stock, ensure that the stock, basically whatever they've sold, whatever is left should be reconciled. Because when you're owning a shop, you also have the risk of people just pilferage, basically, so you need to reconcile that. But that would be typically how it works. Okay. So they don't actually, it's not a complicated form of accounting, and people will do that themselves.
Right. But the output of the accounting will be a report, which is an account.
Actually, it's just a cash book. They don't need something more complicated than that at this point in time, because those small businesses don't need to report to regulators or need to file any specific returns. So they're typically very small by nature, and they don't need that type of reporting.
Okay, yeah. Well, by report, I meant like this is, unless they put it into the transactions.
Yeah.
So, so there are some jargon involved in the some complicated words which accountants will use. So one of them is, you're saying, a cash book.
Yeah.
So cash book, explain what that does. That's money in, money out?
Exactly. It's just money in, money out. Okay. It's as simple as that.
And so apart from the cash book, what other accounts, reports would accountants...
I think the starting point is the cash book. Then once and this is what's beautiful with double entry. So you need to enter the initial transaction, the cash transaction there, and then there needs to be a double entry. So what's the next account that hits? And that's a bit more complicated, because you need to understand, if a cash transaction is hitting your bank account, right, as let's say, or your cash book, you've received a 10 rupees, what's the opposing transaction? So you basically must have sold a good. So you need to remove something from your stock, which is another record that your stock record needs to be there. Once you've removed that stock, but you're going to remove it at the cost price, not at the price you've sold. So you need to remove it at the cost price. Then the difference, where does the difference go? The difference goes to the profit and loss account, which basically is the profit. So it is basically a double entry. Let's say you've sold 60, right? As I mentioned, you've sold 60. The cost of the 60 is 50. That goes to your stock. That's basically removing from your stock 50. Then you need to have a second double entry. The second double entry is the 10 profit. You book it in your profit and loss account. So it's just a simple overview. Actually, it's a bit more complicated than that, but just as an overview, how the double entry works, it needs to be recorded. So this is what we talk about balancing your accounts. Balancing your account means once you put an entry on one side, let's say you put a debit, as you call it, then you need to have a corresponding credit. So my teacher always told me in accounting that accounting is the simplest thing. It's only debit and credit. So long you match your debits against your credit, everything will be fine. Yeah.
I'm not an accountant, but I've studied accountancy, so I understood what you were saying. But I think it shows how complicated it can be if this is the simplest way. But I actually wanted you to say cash. We have a cash book.
Yeah.
Then there are things like balance sheets, profit and loss accounts.
Yeah.
So just a high-level overview of those types of. I call them outputs or reports that the accounting process will develop and what they're used for. A cash book records what you've paid and what you've received.
Yeah.
What is a profit and loss account? What is a balance sheet? We don't have to go into trial balance, but just the type of reports that are out there.
I think to do that, I need to explain that.
And sorry to interrupt you, double entry, can you explain simply what it is?
Okay. Let me start off with the historical cost accounting method. I think this is where the double entry gets even more relevance, right? With a historical cost accounting, you need to record all your, basically what you have, and it may be notional. That is, you don't have it in practice, but in principle you have it. And what you don't have, and what you owe to someone else, which is again in principle and not necessarily factual. Let me just try to explain, right? Let's say when you actually are recording, when you've got that 100,
yes,
that 100 basically, how do you use it? You need to put it in your cash book. You put 100. So what is the corresponding entry? When you're putting your 100 into your business, the business then owes you 100, and that's your capital. This is what the double entry of you putting your money into the business is, that there is a money there, and then there's a capital on the other side. So this is what double entry is about. So the second thing is, let's say you buy the stock. So you will have a first entry. You need to remove the cash money from your cash book. So we call it a credit entry in your cash book. And then what does it go to debit? It needs to debit somewhere else. So it's going to debit your stock at 100. This is where you're buying your stock. Now, what's very interesting is, let's say you're going to sell your stock. That stock, the value of the sale value is, let's say, 120. You cannot keep your value at the closing, let's say you're at the financial year end, basically wherever you close your book of accounts, typically every year. At the closing of your book of accounts, you cannot keep your value at 100 because the actual value of that stock in your books is 120. Because you're going to sell 120. So you actually recognize that value as an unrealized value. So you have not realized it as of now. Your value of stock is 120.
Mm-hmm.
You would create another entry. Basically, you need to add 20 into the value of your stock, and you have an unrealized value that you need to create. So as you rightly mentioned, this is what the principle of accounting is all about. It's recognize the actual value of transactions, and not necessarily the cash value.
Thank you. As I said, I think it's a good thing we have another program where we're going to a bit more detail and we can spend some time on explaining some of these concepts. And we'll look at what a profit and loss, balance sheet. And I think it'd be worth spending a bit of time on double entry and maybe even what is a debit, what is a credit for people. We're running out of time for this initial program, but I wanted to end with a couple of questions that we've received from our viewers of Focus on Finance. So Jazakallah for all the people who've written in. We've had two questions, similar questions from two different Qudam from Mauritius, Walid Rahman and Ahmad Jawahir. Basically, they're asking, what is the difference between accounting, economics, and finance? Okay.
Accounting basically is, as I mentioned, the accurate record keeping of financial transactions, right? And that has to do, is very specific, precise, and it's basically, I would say, it's mathematical. It's very mathematical. So basically, it's based on principles of accounting, but it's mathematical. Economics, on the other side, is basically it's a science of the behavior of certain, I would say, economic parameters that allows you to predict some form of behaviors, human behavior. Just to talk about a very simple thing, we talk about the law of demand and supply. Mm-hmm. So let's say, and everyone can relate to it today. So let's say you have people are asking for more vegetables, and there's less vegetable on the market because for whatever reason there's a drought or something like that, there's less vegetable on the market, the price of vegetables will increase. And that has nothing to do with the cost of producing the vegetable. It's just demand and supply. Let me just explain. The demand for vegetable basically remains constant. So people are still asking for vegetables. They still need, let's say, 10 tons of vegetable to consume every year, right? And the production of vegetables, which is normally 10 tons or 11 tons, is now at 7 tons. So more people will have to, they will want to get access to the vegetable on a more pressing basis. So what people will typically do is say, okay, I want to buy that vegetable at 10 rupees, right? The other guy say, no, I'm going to buy it at 12 rupees. Give me the vegetables, because the vegetable is scarce. And someone will want to push even higher. It's like an auction, right? And then people will push the price higher. So this is because the demand is constant or high and the supply is low. Automatically that will push the prices higher. And that's a behavior that has been studied, documented, and basically predicted, and that works all the time, basically through in normal life. And I think this is where it's extremely interesting, because that actually gives you an understanding of the behavior. That's economics in a broad sense. Finance is basically the use of both sciences, which you're using the accounting data and the economics theory to predict how financial transactions will move, how the environment will move, and how basically you can fend out for your company or your business in the future. And I think finance englobes a bit of, I think, both of accountancy, accounting and economics.
No, very well summarized. And perhaps viewers will remember in one of our earliest episodes of Focus on Finance, we had an economist on, Daniel Arif Saib, and he covered some of this. For me, finance covers everything that has to do with money. Economics is the theory and the study of the science of it, and accounting forms part of that. It's a record keeping. No. That unfortunately brings us to the end of our time in this initial program on accounting. Jazakumullah for your great intervention, and I hope to see you and hear more from you in our second program on accounting and future programs on banking and other topics. So Jazakallah. And Jazakallah to all our viewers of Focus on Finance, and hope to see you in the next episode of Focus on Finance. Assalamu alaikum.